Let's jump right into this explainer. Today, we're unlocking the actual toolkit that professional wealth managers use to protect and grow serious fortunes. Look, if you've ever wondered how the ultra-wealthy maintain their edge, or how a seasoned pro takes a seemingly chaotic financial life and brings it into absolute perfect order, well, you are exactly in the right place. We're looking directly at the strategies and frameworks that define top-tier financial advisory.
So, what makes a truly great financial advisor? You might think it's just about picking the next hot stock, right? Or maybe timing the market perfectly. But what really separates the novices from the heavy hitters? The truth is, relying on market luck is just a losing game. True wealth management is way more methodical. It requires stepping back and looking at a client's entire life situation, not just staring at a brokerage account.
And this perfectly illustrates the reality. Investing, it's like a giant complex puzzle. You aren't just picking stocks. You're balancing banking, volatile markets, disciplined savings, and protected assets, all at the exact same time. A real advisor doesn't just manage one of these pieces. They act as the architect for the entire system, making sure every single moving part works in total harmony towards your life goals.
Okay, here's our agenda. We're going to break down this entire ecosystem into 5 distinct pillars. First, the foundation of protection. Second, navigating the tax maze. Third, securing the long game. Fourth, the psychology of investing. And finally, matching risk to reality. This is the elite playbook to manage wealth from the ground up.
That's hit pillar 1, the foundation of protection, or as I like to call it, building the moat. Because let's face it, before you can grow your wealth, you absolutely must protect it.
Now, you know insurance isn't just a stack of paperwork. It relies on this ancient legal principle called uberrime fide, which basically means utmost good faith. When you're building this foundational moat around your finances, absolute transparency is your best protection. I mean, if you hide a pre-existing condition or a material fact, that entire protective wall, it literally crumbles the precise moment you need it most.
Check out this magic number on the screen. 5. In wealth management, 5 years is a really critical milestone. It's the continuous moratorium period for health insurance. That means if you pay premiums for 5 straight years without a break, your claims generally cannot be contested, except for proven fraud, of course. Simultaneously, 5 years is the mandatory lock-in period for unit-linked insurance plans, or ULIPs, which really reflects the long-term commitment you need for these protective investments.
An advisor's arsenal scales entirely with your specific needs. Whether you're an individual who needs health coverage to survive a sudden personal medical emergency, or a major corporation taking out key man insurance to survive losing a top executive, the goal is always the same: comprehensive defense. They even deploy fidelity insurance to safeguard businesses from employee fraud. It's about patching up every conceivable vulnerability.
Moving right along to Pillar 2, navigating the tax maze through optimization. Because in the real world, it is definitely not about what you make, it's about what you keep.
See, a top-tier advisor doesn't just look at your accounts and see money in. They funnel every single rupee into one of these 5 specific heads of income to legally optimize your tax liabilities. You just can't lump a dividend in with your salary. By isolating income from, say, a rental property versus capital gains from stock sales, a wealth manager can apply highly specific deductions, set-offs, and carry-forward rules for losses that apply to one category but absolutely not to another.
And this table brilliantly illustrates how targeted the tax code can actually be. Understanding these nuances is a real game changer. For example, a published author can shield up to 3 lakh rupees on royalties under Section 80QQB. A regular individual gets 10,000 rupees of tax-free savings interest, but a senior citizen? They get a boosted 50,000 rupee limit under 80TTB. A great advisor knows these micro rules inside and out to plug every single leak in your financial bucket.
All right, on to Pillar 3, securing the long game, focusing on retirement and estate planning.
Will your money outlive you? Honestly, it's probably the most terrifying question in all of finance. With life expectancies increasing, you aren't just planning for a 10-year retirement anymore. You might be planning for 30. Solving this massive puzzle requires mapping your life expectancy against the silent wealth killer, inflation. If your money isn't growing faster than the cost of living, you are literally moving backward.
Let's look at the math in action here, because it's fascinating. On the left, projecting a retirement fund using a conservative 5% assumed rate of return, or discount rate, shows a massive shortfall of over 80 lakhs. Now, look on the right. Tweak that rate to 9.9%, and the shortfall drops to 40 lakhs. Just a slight shift in the discounting rate dramatically changes the projected outcome.
This proves exactly why you must meticulously plan for inflation eating your funds, and why the rate of return you target is absolutely critical to your survival.
Now, securing the long game obviously doesn't end with you. To make sure your wealth smoothly transfers to the next generation without any legal chaos, a professional will structure your estate chronologically. They start simple, making sure joint holdings and nominations are totally accurate. Then they move up to binding family settlements and setting up formal trusts to protect those assets. And finally, establishing rock-solid guardianship provisions for minors.
Let's move to Pillar 4, the psychology of investing, the human element. Because all the math and tax codes in the world just don't matter if the investor panics.
A massive part of an advisor's job is actually acting as a behavioral coach to save clients from their own emotional extremes. We all cycle between greed when the market is soaring and absolute fear when it's crashing. Overexuberance tempts us to just abandon diversification and bet everything on a hot trend, and then fear paralyzes us, often making us sell at the exact bottom of a crash.
So how do we actually fix this? By laying down advanced ground rules. An advisor creates psychological nudges that essentially force you to execute logic rather than emotion. If you agree in advance to automatically rebalance your portfolio when stocks hit a certain high, well, you are forced to sell high and lock in those profits. This elegantly bypasses your worst emotional instincts entirely. It's brilliant.
Finally, Pillar 5, matching risk to reality, customizing the fit. This is where the advisor takes everything we've talked about and tailors it specifically to you.
An advisor has to frame their strategy completely differently depending on who's sitting across the desk. A conservative investor? They're going to be terrified of volatility and just want safe income-yielding accounts. But an aggressive investor actively embraces risk because they know it's the engine for long-term return. What sounds like a once-in-a-lifetime opportunity to the aggressive investor will absolutely terrify the conservative one. The strategy simply has to match the psychology. Depending on that unique risk profile, the advisor will meticulously allocate your assets. They might use actively managed mutual funds, where a manager tries to generate alpha, extra return above the market, for the aggressive portion of your portfolio. Or they might lean heavily on index funds that simply and reliably replicate the market benchmark. That offers lower costs and steady exposure for a much more balanced approach.
So, here's the ultimate takeaway. True wealth management isn't luck. It's a deliberate, highly structured playbook just waiting for you to execute it. From the mode of insurance to the nuances of tax law, estate planning, and behavioral coaching, every single piece matters. The only question left is, are your finances just a random collection of choices, or are you ready to stop guessing and start managing your wealth like a professional?